On behalf of ECDPM and CGD, welcome to our conversation series on the European Financial Architecture for Development, where we explore efforts to maximize the potential European development finance and get to grips with how to devise a more strategic, effective, collaborative, and impactful system. I'm San Bilal, the head of the Trade, Investment and Finance program at ECDPM, and I'm joined by my co-host, Michaela Gavas.
Thank you, Sam. I'm Michaela Gavas. I'm the co-director of the Center for Global Development's Europe program, and I'm also a senior policy fellow.
It is our pleasure to welcome our guest today, Mr. Pierre Heilbronn, who is the Vice President of the European Bank for Reconstruction and Development in charge of policy and partnership. He is a member of the Executive Committee of the EBRD and chairs the Strategy and Policy Committee. Prior to joining the EBRD, Mr. Heilbronn, a French national, had 20 years of experience in policymaking in domestic, European, and broader global context at France's Ministry of Economy and Finance, working notably on the implementation of the Juncker Plan and the French presidency of the COP21, just to mention a couple of highlights. And before that, he worked also as an advisor for the French Prime Minister, as well as in the Ministry of Foreign Affairs and the Ministry of Finance. Pierre, thank you very much for joining us today.
Yeah, thank you very much, San and Michaela.
So Pierre, perhaps I could start with the first question. And this is a question really about some of the points that were raised in both the Wise Persons Group report and the feasibility study that was commissioned by the European Council on the European Financial Architecture for Development. So one of the key sticking points for why the EBRD could not become the EU's development bank was about essentially the EBRD shareholding, both the number of non-EU shareholders in the EBRD and the qualified voting structure. And the feasibility study maintained that the EU's simple majority on the board of the EBRD was not sufficient to guarantee full control over all decision-making. But there were a number of other reasons too, including things like the balance of public and private sector activities, which would need to change, the EBRD's geographic presence and expertise that would need to expand to sub-Saharan Africa. And this final point about the fact that in new geographies, the EBRD would be more dependent on donor resources. So it would be very interesting to hear your take, your view on these points in particular.
Oh, thank you very much for the question, Michaela. And I think your points also underlines, obviously, sometimes the gap between, the institutional rules or the understanding of how institutions are built and how afterwards they evolve after being created and the grounding rules being set. The EU, obviously EBRD is a multilateral institution. It is the only one, by the way, where the EU has such large powers in terms of majority. It is also the only one where the European Commission has a share of the capital. Any private sector company, a majority of more than 50% is supposed to be a controlling majority. And in practice, it is in fact the case. Obviously, there has not been one single project or one strategy which has been implemented, adopted against the European member state and European institutions will. So in fact, sometimes there is a gap between theoretical concerns and or arguments and the practice. The EU and the European Commission is the largest donor and partner of EBRD, and EBRD is the largest implementing partner for external assistance outside the European Union. This, in a way, summarizes very well the very fruitful partnership which has been built over 30 years, first in Eastern European countries, in Eastern Partnership countries, and afterwards in a broad range of regions from Central Asia to the Mediterranean. So I would say this is potentially a huge asset also for the EU to reinvent its role around influence and how to use multilateral institutions in getting influence in an interdependent world. And I would say that with a strong European heart, backbone, and controlling majority, but bringing along other partners is in fact a wonderfully powerful capacity or potential to exert influence in the world. So I would say, and maybe in our conversation we can go deeper on that, on this first argument. On, the fact that we are not covering all sectors, all geographies, I think no development institutions cover both the public, private, African countries, European countries. So I think it's fair to say that we are not, we have a distinct focus. It has been one focus which has been very much defined by our shareholder. It's very much creating sustainable economies based on the development of new markets and market economies. And therefore, the fact that we focus for 75% of our investment on the private sector is something we are proud of. We don't say that we will be the major actor in health or public education. There are institutions which are better placed probably to do that. And I think the main element which comes from the Wise Persons Group and the feasibility study, but also the discussions among member states in the Council and the European Parliament, is that it is the European system as such, and by the way, the international system also, which should bring more or less the added value, building on a multi-pillar architecture to more or less deliver on the SDGs.
The Wise Person Group report really strongly recommended the creation of a single European Development Bank. And Thomas Wieser was telling us again, who was the chair of this Wise Person Group, was telling us again why it was important. In your view, is it really a missed opportunity that now we are, that the idea of having a single European bank, development bank, is abandoned, or why does it matter so much for the EBRD? In a sense, can you not just simply improve and be part of the European group, or do you need to winner takes all?
I think we shouldn't stick too much to words, because at the end of the day, what is important is delivery and capacity to change things in countries which are important from both development point of view and a geopolitical point of view. In a Cartesian world, and I'm coming from a country which always like to think about the world in a very logical frameworks. Obviously, if we were starting from scratch, we would build something new and a single entity. At least you could say it's simpler. It may be more effective. It's not always more effective, but in fact, we are not starting from scratch, and we are starting sometimes from also skills which have been built over decades, if not more, for example, national development banks, which know countries, which have an understanding, a deep understanding of the political economy of some of the countries we are working in. So I would say, like in the monetary field, we've built a European system which bring the value more or less which is needed, and the ECB together with national central banks have been able to deliver over the last decades. I think what is needed is to have a more effective, a more efficient, and a more impactful European system of development. And I think we have all the ingredients with, and I think that's very much the emerging consensus among European countries, that we have all the institutions to deliver that. Afterward, it has to be organized. We have to build the right incentives. And I think in a way, the keys are very much in the hands of the European Commission, with a huge tool, which is this new instrument, which is called Global Europe, which potentially gives the Commission the capacity to steer in the right direction, the system to be more consistent and impactful.
So has it been a bit of a waste of time for the last 2 years to put the EBRD against the EIB to find out which one would be the development bank, or to come at the end and say, well, you should rather work better together? I mean, have we not wasted the focus?
No, you can always say that. I think Thomas Wiese himself, I think, has been very clear that the two scenarios of either EIB or EBRD were not, were more educational, were built to help policymakers think about the kind of mixture of talents, skills, and structures which are needed more or less to deliver collectively at the European level. I think it's not always, you can say also the process is always long. Obviously, it didn't prevent EBRD and EIB to deliver. And I think we've, especially in the last year, where in fact the system has been very much tested in terms of capacity to deploy its resources quickly. I think we've done that, I think, remarkably successfully. I think it also prompted the different institutions to think about more about how they could cooperate, collaborate, build on their respective strengths. So I think that's a very positive achievement of the process, and probably we can share about some ideas which emerged in the last 2 years, which I think probably we can build on, also leveraging on the new European instruments brought by the next MFF, or the next budget.
So do you see possibilities, therefore, for a much sharper division of labor between the EBRD and the EIB?
So I think, we have our natural strength, which have been very much underlined, I think, by both the WPG report and the feasibility study. I think it's very much around for us, for EIB, if I start by our friends, about public infrastructure, big projects, capacity to deploy them extensively in the public sector, or leveraging on public institutions, central banks, also to deliver in these countries. So very much in a wholesale approach, if you want, but an extremely powerful way in terms of amounts and financing capacity. I think EBRD is very distinctive on other grounds. We have a capacity first to understand our markets very, very well, to have a real focus on local actors, be there private sector actors or sub-sovereign actors, municipalities. And it's very important when you talk about climate change, green cities, for example. But we have also a capacity to link also our investment with business-oriented sector reforms, which are so important beyond any financing. So these are just examples, I think, where I think there is a distinctive feature of these institutions. And I think the process from now onwards is really being able to define in countries of operation where we both operate, and even in new countries for us, like I'm sure we'll talk about that in Sub-Saharan Africa, we can bring, at least our shareholders think, that we can bring distinctive things compared to existing institutions. And we proved, by the way, in the last year that this was the case, for example, in Mediterranean country, where it was not just a pie to share among institutions, but it was creating, it was about creating a larger pie or a development capacity at the local level, which at the end of the day can deliver more systemic changes for our countries of operation.
There's a big issue about the systemic changes. I mean, a common criticism for, from development finance institutions is that they, and in fact for many development banks, is that they go for projects and with the focus on the project having a development impact, but they don't consider the systemic transformation. The EBRD started with this objective of systemic transformations. What are perhaps some of the key lessons you draw, and how do you combine that also with the emphasis now on the policy first and strategic orientation of the EU and its development efforts globally?
The lessons we learned, I think, in the last 30 years, because we, as you know, we are celebrating our anniversary this year, is very much that investment is not enough. In fact, there has been a flagship report of EBRD a few years ago, which was called Stuck in Transition, which was very much about the process of transformation of the economies needing more or less a policy capacity, which means that it's not only about chasing for new projects, it's about building the local capacity to handle projects, to handle and to put in place the right frameworks, which at the end of the day can attract private investors and which can crowd in also new funds. And this, we have many success stories and sometimes difficult stories in countries where we didn't find this alliance of reformers, which is needed more or less to bring that change. Very good examples, for example, in the renewable sector in Egypt, for example, where we've been not only able to devise with the Egyptian government the right policy framework to attract international investors, some of them not knowing even Egypt before these investments in the largest solar plants in Africa, but leading to huge investment. So it shows that, dealing with the whole chain from policy, technical advisory, capacity building, and then financing, be it through loans or equity, is the decisive factor in thinking about, the transformation of countries as a transition journey. In a way, the term transition, which when I arrived in EBRD 5 years ago was dubbed as more or less old-fashioned, is more relevant than ever. But the term of transition, by the way, reconstruction, because now with the COVID crisis, we all talk about how we can reconstruct economies and how we can help this transition to low carbon economies, to more inclusive economies, to more digital economies. So I think these two concepts requires very much this alignment and link between policy and investments, and this clear view about what we want to achieve together.
So Pierre, the last year at the EBRD annual meeting, I think the acting president of the bank said that the bank was having a hard time meeting their green targets as their focus was mainly on working with existing clients and trying to keep them afloat through the pandemic, through COVID. I mean, do you see this persisting, or well?
So in fact, 2 years ago, we had an exceptional year. We had nearly half of our investments in the green space on climate, which was the highest level in all multilateral or national development bank globally. So I think it was quite an exceptional achievement, building on many things I mentioned, especially this in renewable, in energy efficiency. I think since March last or beginning of last year, what we've been confronted to is very much an emergency situation. So existing clients having sometimes liquidity problems because they couldn't have access to sometimes capital markets, obviously in the less advanced countries, and sometimes also confronted to banking systems which were not able to give them the necessary means to more or less survive in this period. And in Western Europe or most advanced countries, governments have been in capacity to do that. In other countries, in some countries of operation of EBRD, that has not been the case. So EBRD has to had more or less regain in this capacity, more or less a very additional role. This should be limited in time. What we very much working on is very much trying to transition from this emergency phase to more a sustainable building back better phase, where we are trying to work very much hand in hand with our countries of operation, tilting to green more or less this recovery. And this, at least we have some signs which are encouraging. This requires a lot of energy and focus in the next month.
Well, one of the issues also for the EBRD, as we mentioned on the way forward, is this expansion towards Sub-Saharan Africa, in fact, where you have no experience so far. Mm-hmm. So what are perhaps some of the lessons that you can draw from your previous expansions to North Africa, and how do you plan to move forward towards Sub-Saharan Africa?
So expansion is not a new thing for EBRD, because we've expanded 5 times in the creation of the bank, successively to Turkey, to Central Asia, and to other countries, obviously in the Mediterranean countries after the Arab Spring. Well, what we show there is that first, there is a business model which works well, which is the one where we expand gradually first. So it's not a big bang where we would get 40 countries, and that has never been the case. But we are incrementally expanding operations where we add value compared to the existing institutions which are there, building on a business model which is very focused on private sector, on municipal lending, and on areas of expertise we have on climate, but also in inclusion now, and other sectors. This requires a lot of presence on the ground, and that's, I think, and when I see how much this is important throughout the crisis, having nearly 100 people in Ukraine or in Egypt is a decisive asset if you want to reach more or less not only the wholesale, the big tickets, but you want to go in regions. If we didn't have, for example, in Tunisia, an office in Sfax, or in Egypt, if we had not all these offices beyond Cairo, we would not be able to reach out these population, these companies. And I think this is very much how we thought about potential expansion to some sub-Saharan African countries, is to bring what we do well and what we do and where shareholders and countries see our distinctive added value. And I think that's very much an ongoing discussion. This has been recognized by our shareholders as a strategic priorities for the next 2 years for decision in 2022. So we are very much in the middle of this analysis and discussion with our shareholders.
But many European member states are saying that in the revamped architecture of the European financial architecture for developments, they don't want to have additional costs. The question, can you expand seriously to Sub-Saharan Africa without having to incur additional costs and perhaps a capital increase for the EBRD?
This clearly is an element which is at the center of the attention of our shareholders. Obviously, EBRD is in a privileged situation because compared to other development institutions, we have capital leeway. And that's why, by the way, this discussion is happening. It has been recognized by the feasibility study that we had a margin of capital which could be used beyond also the response to the crisis. And we showed that, by the way, by increasing our amounts in the last months in terms of total investments. I think, and by the way, we have a very strong record in also showing to our shareholders that we are been making profits over the last 30 years in a quite remarkable way. So the question is, and that is really very much the discussion we will have and we are having with our shareholders, what is the acceptable level or degree of expansion we would pursue in the next years? Is it 5 countries? Which kind of countries? Some of the countries we are talking about are in a way less risky than some of our existing countries of operation in terms of geopolitical risk, financial profiles. So I think also this has to be taken into account in the decision which will be made by our shareholders.
But if you go in the less risky countries, is that really where you would have a value added? I mean, wouldn't be the purpose of trying to go to these places where others would tend not to go?
No, but I think first, EBRD is a bank where for countries which are in war or where basic public infrastructure are needed. Obviously, EBRD is not. You wouldn't see EBRD as the first institution there. We are not a humanitarian institution. We are not focused only on basic public infrastructure, on education or health. So for that, obviously, in the most vulnerable countries, obviously it's not the kind of focus you would look for EBRD. But I think there are quite a lot of this middle range of sub-Saharan African countries, which are emerging ones, which are extremely important for the stability of the African continent, for also in terms of neighborhood relation with the neighborhood of Europe, which means more or less the countries where we are in, for Tunisia, for Egypt, for Morocco. These countries like Ivory Coast, like Senegal, like in this second belt of instability, if you want, or are very important. And these countries very much were, at least first, these countries themselves and our shareholders see at least the potential of EBRD bringing its added value, as we did in Morocco, in Tunisia, in Egypt, where we didn't do the same thing that IFC or the World Bank or Agence Française de Développement were doing, but we proved that more or less we all together did more, and we were able to put also our capacity to support these countries in developing the right business environment in place, so that more or less private money can be crowded in these countries.
So then that's a great steer towards this sort of final question, which is really around the outcome of this, your process on the European financial architecture. So the way things stand, it looks like the status quo plus option seems to have prevailed amongst the member states. But some people say that it's likely to fuel further competition between the European development finance institutions instead of creating the synergies, instead of encouraging cooperation and complementarity, as you were saying, and that it is particularly unappealing for Europe's partner countries and unattractive for European companies in light of different procurement requirements, financing conditions, the different entry points, the different risk approaches. So don't you think that the status quo plus is de facto status quo? And that means the current fragmentation, duplication, and competition will in effect continue?
That would be a huge missed opportunity, I think, if it was the case. By the way, the expression of status quo plus is, I think, extremely extremely inadequate to describe what is or should be needed. What I think is that you have institutions which have a capacity. We don't need a new institution, and I think that's or an all-encompassing institution. By the way, even if we had one at the European level, we would have the same question at the international level: should we have only one institution? I think what is needed is to organize more or less the complementarities and cooperation, and I think it requires political courage, both at European level and for each institution. What I mean by that is obviously that it requires political courage to impose on institution a political will. And I think that is needed and is normal for shareholders of institution to give strategic guidance and define also what is expected in a coherent way. The German, the French representative or governor of these different institutions, or the American one, should have a consistent approach of the objective it should wish to pursue, and make that clear to the different institutions. There, I think the WPG report, and I think pointed to some malfunctioning also at shareholders level, and I know that because I've been also, as some reminded, beginning spending a lot of time both in Paris but also in the European Commission, where I think now the path forward is very much about having a more joined up approach between ministries of development and ministries of finance, among themselves. Also this sense of togetherness, which often is lacking, also in the European Commission, to have that very much in a way between the different DGs which are involved there. And building also some instruments which can make a huge change. It happened that I worked a lot in the last 10 years, in the Western Balkan region on this platform, which is called the Western Balkan Investment Framework, which in fact is an extremely powerful and important tool, which we should try to replicate. It's very much the Team Europe idea, which means more or less bringing the different actors around a table with a very clear steer in terms of policy objective and capacity to look at the what is needed in the different countries. The Commission having now the financial instruments to make that possible, because obviously all the different players have interest to go to this table with the open architecture principles, which are very much at the basis of the global Europe instrument. And also having the countries, the beneficiary countries around the table. And I think in a way, WBIF is a very good model, because you have ownership. I think in the policy space we talked about before, you will never be able to achieve policy changes if the governments who are our partners don't buy in this approach. In fact, we have an advantage in EBRD, having them as shareholders, by the way, and participating to our board and making their points and their views known. But also you have it's not as a neo-colonial approach coming from outside. It's very much something you embark beneficiary countries around the table. And I think, what can come from this discussion is also the capacity to strengthen blending platform which exists, reduce transaction costs by harmonizing procedures among institutions. So, these questions of mutual reliance on procedures is a fundamental one. Defining common standard is a fundamental issue if we want to reduce this transaction cost, but also, putting the capacity of crowding in together other donors around agreed priorities among European development financial institutions. So I think, in fact, we should really bury this term of status quo plus and be very ambitious about collaboration, cooperation, and what it means also in terms of difficult discussions, which makes the system more consistent and coherent. And in a way, resonates very much with the motto of the European Union, which is united in diversity. In fact, diversity is a huge strength when it is well organized. So this organization should be very much framed and defined in the next month and years. And I think the crisis, in a way, increased very much the awareness of this need within the Commission, within member states, because resources are also scarce. So duplications and unnecessary competition leads to destruction of value, while we should more or less really step up our efforts collectively.
And as the EBRD, what do you do to cooperate better and to strengthen your cooperation with the EIB, but also with the European DFIs that are, like you, focused on private sector finance? I mean, do you have initiatives in the pipelines to strengthen this cooperation?
Yes, so in a way, EDFI, it has been, it is not new, especially with private sector focus arms of development institution, because the FMO, Proparco, DG of this world were always not only applying the same principles as additionality, but also and discipline to pricing, so that we look at long-term needs of these countries in terms of market development. There we took a very strong step a few weeks ago on the basis of an MOU which was signed in February, in the presence of the Director General of International Partnership of the Commission, with 5 of these institutions. I think it's very much defining where we should go in terms of also EBRD can provide support in the policy achievements which are needed by this institution, because we have obviously the critical mass when we talk about countries where EBRD is the first investor, obviously being able to make the case and to have a credible also dialogue with the Ukrainian government, with the Egyptian government, or with the Uzbek government, on reform of the tariffs in one or on another sector is one element. For the EIB, we've launched a work around 6 themes. Obviously, it's a little bit early to come back with all the items where we made progress, but we made, in fact, in the last 4 or 5 last month, a lot of progress on issues, on climate standards and implementation there, mutual reliance, and also potential new vehicles, investment vehicles, which could be joint ones between institutions. And I think, the first report which will come up from also this process following the Council conclusions, which will be adopted in a few days, will be a report in November. And I think the more we will be able to do joint reporting between the two institutions, the better. And at least on these work streams we launched, we very much are aiming at presenting results to both the European Parliament and the Council of Ministers around this autumn. And afterwards, it's obviously a work which requires sustained efforts because it's a question of procedure, but it's a question of also people working together and working more and more together. So I think the two leadership in the two institutions are very much ready to that.
Well, we look forward to seeing these new initiatives and this new cooperation, which I think is nice if institutions can work together instead of this rivalry that we have seen sometimes not too pleasant over the last few months. Thank you very much, Pierre, for your availability and for answering our questions. And we look forward to continue this conversation in other formats. Thank you very much, Pierre.
No, thank you very much, Michaela and Sam. And very much looking forward to continuing this discussion.